Whenever you move money around digitally, have you ever stopped to think about what's really going on behind the screen? There's this incredibly complex, super high-speed engine just humming away to make it all feel so easy. Well, today, we're going to pull back the curtain on that exact engine. We're talking about the critical system of liquidity and treasury management that literally powers all of modern digital finance.
So here's what we've got on tap. First up, we'll get into the foundational idea. What even is liquidity? Then, we'll look at the huge puzzle of bridging old-school money with new digital assets. After that, we'll see where the money is kept, how a smart system keeps it all balanced, and, the most important part, why any of this behind-the-scenes stuff should matter to you.
Okay, let's start at square one. This is the absolute foundation of the entire system. Before we can get into any of the cool stuff, we've got to wrap our heads around the one concept that keeps the whole digital economy moving: liquidity. I want you to imagine this. You open an app, you hit withdraw. You just expect the money to show up, right? Almost instantly. But how? How does that system guarantee the funds are actually there right at that second? Not just for you, but for thousands of other people doing the exact same thing. Well, that is the entire problem that liquidity is built to solve.
So, to put it simply, liquidity just means having the right amount of money, in the right form, sitting in the right place at exactly the right time. It's really the system's promise that when you ask for your money, it can hand it over. No questions asked, no delays.
Let's use an analogy here, because it makes it way clearer. I want you to think of this whole digital payments network as like a complex living thing, a living body.
And in this body, money is the lifeblood. It's got to be constantly flowing everywhere, from you to a merchant, from a backup reserve to an active account, just to keep every single part of the system healthy and working. And this really shows you what's at stake. If that flow, that liquidity, dries up or gets stuck somewhere, the whole system just grinds to a halt. I mean, transactions would fail. You wouldn't be able to withdraw your money, and all the trust in the system would just poof, evaporate. It is that important.
Right, but here's where it gets really tricky. A modern digital ecosystem isn't just dealing with one kind of money. It has to be a bridge between two totally different financial worlds, and it has to do it all at the same time. So, on one hand, you've got your regular fiat currency, dollars, that kind of thing. It all lives in traditional bank accounts, and it moves through these old-school networks that have business hours and delays. But then, on the other hand, you've got cryptocurrency, like USDT. That's in digital wallets, and it's moving 24/7 on blockchains. The thing is, these two systems, they don't speak the same language at all. So the real trick, the core challenge, is building a solid bridge so that value can flow between them without a hitch.
So, how in the world does this system pull this off? Well, it all comes down to three main pillars, or big reservoirs that hold all the funds. Let's take a look at each of them.
The entire financial strength of the system is really built on these three things. We have our traditional fiat accounts, our specialized crypto wallets, and our strategic exchange accounts. Let's break down what each one does.
Okay, pillar number one. This is the link to the classic financial world. We're talking about the bank accounts and mobile money accounts that handle all the cash coming in from deposits and all the cash going out for withdrawals. The second pillar is the crypto side of things. And this isn't just one big wallet. It's a really smart system. So you've got hot wallets for the day-to-day transactions, warm wallets for bigger settlements, and then cold wallets, which are kept totally offline for maximum security. That's where the big reserves are held.
And the third pillar? Well, think of it as the ultimate safety net. By keeping some funds on external crypto exchanges, the system can grab extra liquidity super fast if there's a sudden spike in demand. It's what makes sure the well never runs dry.
Now, having money in all the right places is one thing, but moving it around intelligently, automatically, that's where the real magic is. This is all run by the system's smart brain, a bunch of automated rules that are working around the clock. And here's where the system gets really clever. It's not just sitting around waiting for a problem. It is constantly, 24/7, monitoring the money levels in all those accounts we just talked about. So let's say the hot wallet for withdrawals gets a little low. Boom, a trigger goes off, and the system automatically moves funds from a secure reserve wallet to top it right back up. This rebalancing act is always happening, keeping everything perfectly in check.
Another key part of this brain is the pricing engine. So when you swap your fiat for crypto, how does it decide the price? Simple. The system grabs the current market price from big exchanges, and then just adds or subtracts a tiny little margin, what we call a spread. This makes sure the price is always fair and in line with the live market, while also covering the system's running costs.
Okay, so we've seen where the money is, and we know there's a smart brain managing it. But what's it all for? This liquidity isn't just collecting dust, it's being put to work. The funds are all split up into different pools, and each one has a very specific job to do.
Right, and this is so important. It's not just one giant bucket of cash. There's a special pool just for customer trades, another one to make sure businesses get paid, a separate one for physical cash agents, and of course, a pool that's only job is to guarantee your withdrawals. And watching over all of them is the big one, the Treasury Reserve, the final backup for everything.
All right, we've gotten pretty deep into the nuts and bolts here. Rebalancing, settlement pools, treasury pillars, but let's tie it all together. What does all this complex automated machinery actually mean for you, the person just trying to use the app? This is where it all clicks.
It means it just works. The whole point of this incredibly sophisticated engine is for you to never even know it's there. It's built so that when you want to pay or convert your money or take it out, the experience is just instant, smooth, and totally reliable. Why? Because the system already knew you might do that and got the funds ready ahead of time.
And this whole thing isn't just about making today work well. The entire architecture is built to grow. The vision, as this quote from the designers puts it, is to build a complete financial ecosystem that can get bigger, stay compliant with rules, and always be secure. That's the big picture.
So, I'll leave you with this thought. The next time you tap your phone to send some money or make a payment, maybe you'll have a little bit of a new appreciation for that silent, complex, but absolutely vital engine that's working hard in the background to make it all possible.